To illustrate how quick this change has happened, just in 2014, Chinese players were only 9% of the market. That's now 25% today, and if you look at order books, it's 34%. And other Asian leases have grown by a similar amount. This is essentially probably the most important slide. I've done quite a lot of the way to figure out that these Chinese players are coming in is really to do the primary research, and one of the comments I kept getting was that the Chinese are a threat because they have this lower cost of capital. So if you look at this table at the bottom here, this is a list of the Chinese companies in the global top 20, and what you find is that almost all of them are owned by banks, either directly supported by the government, indirectly supported, and what this allows them to do is raise capital through the state or through bank debt at 2 to 4%. On the other hand, Western leasing companies have to go to the capital markets to issue equity or debt, and this puts them at a significant disadvantage. The result of this is that whereas ALC has traditionally offered leases at 10 to 12%, Chinese players are doing this at 7% or even lower, and ALC has therefore become the high-cost provider in a commoditized industry. And people in the industry are basically exasperated by this because they've come up against a competitor that has a huge amount of capital, wants to go into this industry in a big way for strategic and political reasons, as well as having an economic advantage in being able to offer those lease rates. If you look at the last 2 years of earnings calls, only 2 questions have been asked about Chinese leases. And as I said, on the sell side, I haven't come across a report that really mentions them as a big risk. In fact, so far as China is mentioned, they're talked about as a positive because the growth of Chinese airlines creates demand for more planes. It's not a big part of my thesis, but as an aside, I think that's actually a negative because a lot of these Chinese airlines have been encouraged to take their planes from Chinese leasing companies rather than Western leasing companies. And so the 20% of Air Lease's customers that are Chinese airlines is at threat, I think, over the long term. When you speak to people in the industry, it's clear that the change has been very rapid. And because these leases are on contracts, it actually hasn't dropped through significantly yet. It's very difficult to find information on these players. Some of them are state-owned. They tend to be very opaque. And just to give you one anecdote, I spoke to a founder of a Western leasing company, and he said that when he went to a conference in San Diego for leases, there were almost no Chinese leasing companies there, but when he went to one in Hong Kong, it was of course dominated by Chinese leasing companies. So if you're a Western investor and this is not a topic mentioned on earnings calls, it's certainly not mentioned by management, it's not mentioned by the sell side, these companies aren't there when you go to conferences, how are you going to find out that this is happening when it's happening so quickly? And the answer is that is why this opportunity exists. The result of this is that lease rates have come down, and one of the comments that someone I spoke to said was that the golden age of leasing has ended. Essentially, you've had a market where even at almost zero interest rates, you've been able to earn 10 to 12%. And what's happened is that this has really compressed and is likely to keep compressing. So this chart shows the lease rate for a Boeing 737, which is a short to medium haul aircraft. It makes up 40% of Air Lease's portfolio. The 2 red circles are the previous bottoms, 8.5% lease rates. In the middle, we had a huge boom, which you would expect at the upturn of the cycle. What's very interesting about the current cycle is whilst it started off with a boom for 2 years, actually, as Chinese leasing companies came into the market, we've had a downturn in lease rates, even though the market has continued to get stronger and stronger. And so, whilst we are at the top of the cycle, or close to the top, we actually have lease rates today at the same level as the bottom of previous cycles. And so the data is strongly suggesting that actually this really is a structural change, as the people in the industry are saying. And if you look at ALC at a company level, you see a similar trend. So this chart starts in 2014, just when the rates started going down in the previous chart. And as you'd expect, ALC's lease rates have fallen at a company level. But what's very interesting is that the street expects this to rebound quite strongly, whereas I've modeled it to continue falling. And I think it's important to mention that because these are 7-year contracts, the falls in the last 2 years, still take time to drop through as these contracts roll over. And so essentially what I'm modeling here is just that mechanical change continues as these contracts roll off. And that is essentially where my base case ends. What I will talk about, however, is the bear case. This is a highly cyclical industry. Typically, as you saw from some of the previous charts, in a down cycle, a lot of these aircraft values can fall 5 to 30%. And this is really important because the value of air lease really comes from the value of the planes on the balance sheet. And so because a 10% impairment of these plane values drops through to a 1/3 fall in book value, this is a really important point. I can't tell you when the cycle is going to turn, which is why this is not in my base case, but what I can say, almost everyone in the industry thinks that we are at a sort of unprecedented high or we're somewhat close to the top. In fact, I just found this article on Reuters a couple of days ago, and if you can't see the title, it says, "Global Air Finance Titans Ponder Whether Boom Will Ever End." In fact, there's a quote in there where sentiment is as positive as I've ever seen from the second biggest leasing company. So there's actually a lot of fear in the industry that if and when the cycle does turn, it's going to be particularly bad because there's so much money that's come into the industry that there's a huge supply of planes, and when the demand goes, the supply does not go as quickly because these planes are contracted typically. Just to touch on valuation, I have a detailed model in the appendix where I go through all the different lease rates and contracts and so on, and I get a 47% downside based on that. But just to take a step back and think quite high level, this is a company that's earned 10% ROE that I think is structurally challenged. Its peers trade on 1x price to book, but it trades on 1.4x. And I think at best it should trade at that 1x, but really I think it should go low. The whole group should go lower than that. I'll just draw your attention to the last red cycle on the lefty. Maybe you can't see it, but in the previous recession, these companies traded to 0.2x price to book, and their share prices fell over 90%. And that's, if you want to be really bearish on the cycle as well as the structure, that's how you get to the 90% downside. And just one last point I'll make is just on the upside risks. This is a takeout candidate, which has always been quite a big part of the bull thesis. It's a lesser risk today than it was a year ago. A year ago, a company like HNA, which is the biggest Chinese leaser, was very explicitly saying they wanted to make an acquisition, which this basically fits. However, if you look at today, HNA are actually trying to sell assets to raise cash, and so I see that as a much lower risk. And actually, if HNA has any financial difficulties, that's the best thing that could happen from a short perspective. So I'd like to finish there and open up for Q&A.
In the lease rate, what's driving the street's opinion that there's going to be a recovery?
When you repeat just the question to everybody.
Yeah, so I think the question was on, in terms of lease rates, what's driving the street's recovery, expectations for recovery? I think part of that is an expectation for higher interest rates. There is a view that Air Lease have encouraged that if interest rates rise 1%, you'll see a like-for-like rise in rates for the company. When I spoke to people in the industry, they're sort of much less clear on that, because if you're an airline and you're paying 10% today and interest rates go up 1%, you're not automatically going to be willing to pay 11%. And so it's still driven by supply and demand. And to the extent that higher interest rates translate into a higher cost of capital, that might force lease rates higher indirectly. But I think there's just a lot of complacency in that. And I think in general, the street doesn't think this is a structural change, and so some type of normalization in there, I think, is better. Yeah.
You mentioned that this is a cost of capital business, and whoever has the lowest cost of capital should be competitively advantaged. Were you able to talk to any leasees to get their perspective on this business? In other words, Do they confirm that there is no service or value add provided by the lessor, and they truly go with the lowest cost provider, or is there value add that these resources provide?
So just to summarize the question, I think, is this just all about cost of capital? Have I spoken to airlines, and are there any other value-added elements? So there is some nuance to this, and I think this was particularly strong a couple years ago when a lot of these Chinese players were very new, and you'd hear stories about things like an aircraft gets delivered and they're just not there to collect it, and all these sorts of things. That is definitely reduced, and people will say phrases like, they're still learning, it will take them time, but they'll get there eventually. And so I think there is a certain level of premium, and I've spoken to some airlines about this, and there is a premium they'll pay, but it's not sort of 4% or 5%, which is the gap. And that gap's going to just get smaller over time as these companies get more professional. The other way the Chinese have tried to mitigate this is they focus on the really newer planes, where less expertise is required. If you are buying a 10, 15-year-old plane and you need to refit it and so on, that takes a lot more expertise than just buying a new plane. And so that's how they've tried to mitigate it. Yeah.
Could you go back to your chart on market share?
Yeah.
Where you showed the Chinese taking significant market share?
Yeah.
And can you talk about, over that 3-year time frame, how much of the fleet is now Chinese versus was back in 2014?
A fleet, you mean in terms of...
How much of the global fleet of aircraft that are leased are Chinese versus 2014?
Yeah, so if I've understood maybe I'll just explain how I got these numbers, and that might answer your question, and if not, I can try and answer again. The way I calculated these is, first of all, it's actually quite difficult to calculate because some of these players are fairly private. So if you look at the top 20 globally, most of them explicitly say how many planes they currently have in their portfolio. And you can also look at various order announcements and get a fairly good inference as to what their number of planes are. And then we know the top 20 make up 80% of the global fleet. So in this chart, for example, when it says 25% are Chinese, what that means is, of the 8,000 aircraft that are estimated to be in the market, 2,000 of those are owned by Chinese leasing companies, being leased out to a variety of airlines.
Right, but do you know if some of that has to do simply with the rapid development that has happened with domestic Chinese airlines rather than taking significant market share from operators that Air Lease would have historically had in their book of business?
So a big part of that definitely is the fact that Chinese airlines are the main source of growth in the airline industry, and naturally the Chinese leasing companies have an advantage there. What I would say, however, is that actually of all the Western leasing companies, Air Lease actually has the biggest exposure to Asian airlines. So over half the customers are Asian customers. So that's actually, I wouldn't look at that and say there's a mix effect. I would actually look at that and say that's a really big threat, because if half their customers are Asian and the Asian leasers are benefiting because they have that exposure, I would actually see that as a big part of the risk.
And can you go back to the falling lease rates chart that you had? We show the trend of lease rates.
This one.
Yeah, and it's interesting, back in 2014 you saw very aggressive efforts on the part of the Japanese and the European central banks, and in the middle of the Federal Reserve printing a lot of money and managing down interest rates. So is it your assumption that the aggressive decline you saw in interest rates over that time period has nothing to do with that fall in lease rates?
I think that is partly an explanation. And this isn't a perfect chart because, first of all, this is for a new plane, and obviously there are a variety of ages in the portfolio. It's only for one specific type of plane. I chose this one just because it's the most representative, and of the fall in lease rate, 1% fall in those 3 years, I don't know to what extent can be attributed to the ECB and Bank of Japan versus Chinese leases. But what I will say anecdotally is when I spoke to various aircraft appraisers, they attribute most of the fall to the competition from the Chinese.
And just one more question on that, and then I'll leave it there, is if you look at, so I know historically that Mitsubishi has been a very active participant in this industry along with a number of European players, right? And if you look at actually where interest rates are in those countries compared to where they are in China, where China has distinctly positive rates, and in those countries they're 0 to negative. From a cost of capital perspective, the underlying presumption has to be that the European and the Japanese lessors are starting out with cheaper funding versus the Chinese. Now, I'm not saying H&A is rational because I know they're not. So it's an irrational world, but it's just interesting when you look at this chart and you consider that spread, that the cost of capital might actually be driven down partially by the fact that they're competing with areas that have actually lower cost of borrow than what they would have. So I'm wondering.
Yeah, that was and actually, the people in the industry always